Stock trading. In this video, we are going to go over things to consider when trading stocks. So in the last video, I covered everything that you need to consider when you're trading options. So in this one, we're going to focus more so on stocks. Now, as I mentioned before, when you guys are taking on trades, not every stock is the same, right? So stocks have different characteristics and behave differently based on their price, volatility, and liquidity. So not every single stock is the same. So I'm just going to put it in two categories. We're going to call them large caps and we're going to call them small caps. Now in small caps, there's also like mid caps and ultra small caps, like very small tiny companies. We're just going to label all of these as one companies, and then we're going to put in large caps, we're going to put all the large companies such as Apple, Microsoft, Roku, and so on, right? Now, as I mentioned, every single stock has different characteristics and they are all going to react to price action a lot differently because of their price, volatility, and liquidity. It's very important to understand that. So when you guys do take on some trades, you kind of have an idea that, hey, this stock may or may not behave like the other stock because every stock is going to be different, right? So what are the characteristics of stocks? Now, these are some things to look into. So one, we have shares float. So float is how many shares are tradable. So basically anything with 20 million or less is considered low float. Now when you guys have a stock that has low float, that means that there is a higher probability for higher price fluctuations. When there's high float, there's small price fluctuations. So think about it for a second, right? Shares float, once again, represents quantity, okay? Now when there's a lot of quantity present, a lot of supply available, it's harder for prices to make a drastic move up or drastic move down. When there's less quantity, it's easier for a stock to make a move up or down, right? So that's where float kicks in. There's some people that don't even touch stocks that have like 2 million or 3 million shares float because that's very, very small. Some people are like, I'm not touching the stock at all because it has a super low float. And obviously, once again, a super low float means that the stock can and will fluctuate up or down at a very fast pace. Now, the next thing, market cap. Market cap, once again, is what is the valuation of the company. A higher valuation means it's harder for the stock to move opposed to a smaller valuation, right? So let's take an example. Let's say Apple, once again, and I went over this example like 2-3 times. If Apple is valued at let's say Apple is valued at $1 trillion and we have Roku valued at, let's say, 20 billion, right? Now, if that is the case, it's easier for stock Roku to go up 200%. Not saying it is going to go up 200%, but it's easier for stock Roku to go up 200% in a day, in a week, in a month, opposed to Apple. Because if Apple goes up 200%, that means $2 trillion has to get added to the market cap. Here, only 40 billion has to get added. And yes, 40 billion is a lot of money, but when you put it next to $2 trillion, 40 billion is obviously very, very small. So that's where market cap kicks in. Now, there's certain companies that have a market cap of maybe $50 million. Now, obviously, if you come across a company with a market cap of $50 million, you can imagine how easy it is for that stock to rapidly make a move up, and also how easy it is for that stock to maybe make a rapid move down. It works both ways. Don't forget about that. It doesn't just work one way. A lot of people think, oh, I'm going to trade stocks that are worth 50 million because they have a higher probability of going up. No, I never said that they have a higher probability. I'm just saying it's easier for it to move up and down. So don't go out chasing these type of stocks that may make it very, very hard for you to actually find trades that are suitable based off your risk tolerance, based off what you're looking for in trading. So don't go and trade a stock or a company that's worth 50 million. That's up to you. And if you do trade these companies, make sure you are aware and you understand what you are trading. And then finally, we have volume, which also represents liquidity. Basically, what is the daily average traded volume? When you guys are looking for stocks, primarily look for anything over 500,000 average volume on a daily basis. I usually don't touch anything below that. If a stock is trading less than 500,000 shares a day, it's not really tradable. Like sometimes a stock may have 100K, sometimes 50K. I'm not really a fan of that. But if you are someone that wants to trade that, go for it. But just please be understanding and please have an idea of what you are getting yourself into. So these are some characteristics that you should focus on and you should kind of understand. Now, I'm going to show you a few different stocks and you're going to see how they all are different, have different market cap, have different float, and so on. So first, we have stock Roku. So this is a 1-year chart for stock Roku. Now, if you take a look at stock Roku, you can see it has a 91 million share float. Obviously, that's not low, but it's not super, super high. This is pretty solid. Now, you can see the market cap. Market cap of Roku is about 17.66 billion. That's how much the company's worth at this current moment. Now, this is Roku. You can see Roku in a year, right? In about 9 months, not even a year, in about 9 months went from about $26 all the way to 176, right? So Roku right here was able to move up 7-8 times, right, within 9 months. Now, when you really, really look at that, that basically means that around here, Roku's market cap was probably 2 billion, 3 billion, right? 2 billion, maybe 1 to 2 billion. That's how much the market cap was. And in a year, it was able to do that. Now, if you took on another stock, let's say Apple, and Apple was worth 1 trillion, for Apple to go up 7x or 8x in a year is not really possible, because for a company worth $1 trillion, that means they need to add 7 trillion to 8 trillion dollars to go up 8 times. But obviously, Apple would be a safer bet than a stock like Roku, so you guys can see what the difference is right there. Now, just to recap all of these things here, we have shares outstanding. Once again, shares outstanding means how many shares the company has available, and the float represents how many shares are tradable. Not every share the company has is tradable. Only 91 million shares are tradable, but the company has about 119 million shares. The short float represents how many shares are shorted based off the float. So about 12% of this is people shorting the stock. And then obviously, once again, market cap, which is the overall valuation of this stock. Now let's jump to another stock, BPTH, completely different stock. Now, if you look at the shares outstanding, 2.88 million. Look at the float, 2.74 million. Obviously, it has a small short float. And look at the market cap, only 22 million. This stock was able to go from $2 all the way to 73 in about 5 days. Why is that? It's because obviously this company has a very small market cap and also has many small amount of shares, right? Their float is very small. They have a very tiny float. And because of that, this company was able to make a drastic move up. Right now, if we flip this, and let's say the company was worth $200 billion, right, at this level, do you think that this company could go up about 500 to 1,000 to 2,000% in 4 days? Probably not. The only reason it was able to do it is because it had a small market cap, and obviously there was not a lot of supply, so that aggressive buying pressure or move up was very, very easy. Now, when you see stocks like this, when you see a stock like BPTH, you have to be careful on holding these stocks overnight, right? So if I see a chart that looks like this, I'm not going to hold it overnight, right? So if I see this, wow, this stock went from $2 all the way to 73 in 4 or 5 days, and now it's back at 2, back at 3, I'm not holding the stock overnight. That's not what I'm doing. But if I see something like Roku, maybe that would be a stock I'd be comfortable holding overnight. So that's where a little bit difference also kicks in. Right, next, let's look at this stock, Apple. Now we got Apple going on. You can see Apple in a year went from about 142 to about 223, right? So Apple in this situation added about maybe 50%, right? This was a huge year for a stock like Apple, right? 50% was added, which is a lot throughout a year, throughout 9 months. But let's look at Apple's information. Look at how many shares outstanding they have, 4.45 billion. Look how much shares float they have, 4.4 billion. That's a lot of supply. And obviously their short float, 1%, not a lot. And their market cap is of over $1 trillion. So right now, Apple is worth over 1 trillion. So basically, look at it like this. For Apple to go from $220 to $440, what a lot of people look at is that Apple needs to add $200. No, Apple needs to add about $1 trillion to their market cap, which is a lot, right? That's the difference between these companies. Let's look at a few more. Next, we have Tesla. Now, when we look at Tesla, you guys can see, same thing with Tesla. Shares outstanding, 180 million. Shares float, 142 million. And look at their short float. Very high short float. Remember, anything above 20% is high short float. And then market cap, about 60 billion. Now, Tesla's a company that can maybe go from 270 to maybe $1,000 or more, because if they do, that means their market cap has to maybe 2x or 3x, which is possible, right? Which isn't a crazy amount like $1 trillion, which is still feasible and it can happen, right? But what you guys have to understand is, once again, for that to happen, obviously we need a lot of good news, a lot of good catalyst, solid market direction for Tesla to actually go higher and higher, great earnings, and so on, right? Obviously, Tesla has earnings coming up. If Tesla's earnings do well, Tesla can go higher and higher. We might even see 300s, might even see high 300s, but that all depends on what's happening. Now, just to cover a little bit on short flow, just to kind of bring that up because it's here. Since Tesla has a high short float, right, what this represents now is if Tesla, let's say, has good earnings, good news, there could be a very high probability that we could see a short squeeze. Once again, we covered this in the beginning. A short squeeze, once again, is, let's say Tesla has good earnings, right? If the earnings do well, that means a lot of people that shorted, and you can see there's a high short percentage, they're going to have to cover. And as they're covering, that's going to create buying pressure. And that buying pressure will drive this stock up higher and higher and higher and push it to 300s or higher than 300. That's where the short float kicks in. If you notice with all the stocks I covered, this by far has the highest short float. But once again, going through the logistics, you can see Tesla being a multi-billion dollar company, their fluctuations are not the same as a stock like BPTH. Now, last one, Seal. Now look at this stock. $12, went all the way down to $2, went back to 8, went back to 2, 4, 2, and so on. Shares outstanding, 26 million. Shares float, 21 million. Short float, 2.4%. And obviously market cap, very small. You can see small market cap. Shares float is small as well. These two indications right here represent that this company can make very strong moves up or down. These are not companies to be held. Like, I would not, if I see a chart like this, I would not buy the stock and hold it. Like, I would not be comfortable sleeping at night. That's one of these companies. These companies are meant to be day traded. You get in, you get out. You get in, you get out. But they are not meant to be held overnight. These are those shitty companies that I brought up a million times. Be careful touching these type of companies or swing trading these. These are companies that you should be day trading, right? So if you are trading these, your strategy or your approach should be, I'm going to day trade it. I'm not going to swing trade it. I already don't like the chart. I don't like the history. And if you're someone that's not comfortable with trading stocks with low float or even holding a stock with a small market cap, that's totally fine. $25 million, guys, is a very, very small market cap. Like, that sounds like a lot of money, $25 million, but $25 million in the overall marketplace is very small. Like, that's tiny. So seeing stuff like this allows the company to fluctuate up and down very, very rapidly. Just to wrap everything up, as you guys are trading, as I mentioned, you have to pick a trading instrument. Are you trading stocks or are you trading options? Now, whatever you pick, obviously options come from stocks. So you need to understand stocks first. You need to understand the dynamics, the characteristics of each stock you're trading. Once again, me personally, I like to trade the higher end stocks, Apple, Roku, Microsoft, Amazon, and so on. That's what my trading strategy consists of. I don't like touching stocks like Seal. I have traded Seal. I have traded BPTH in the past. Recently, my trading strategy has shifted, but if there is a time where I see an opportunity in Seal or BPTH or a stock that's at a similar characteristic level, I would trade it, but I understand what I'm walking myself into, and I have a different approach with a stock like Seal and a different approach with a stock like Apple. And that's what I want you guys to take away from this video, that every time you approach a trade, you have to have a different outlook, a different approach to each trade based on the stock you're trading or the instrument you're trading. And that's very, very important for you to get a grasp of.